Thursday, March 14th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about inflation and how it's an insidious tax imposed upon society, and it's happening now, not only here in the UK, but everywhere else in the Western world, probably everywhere else in the world. And governments and central banks are usually the culprit. I'll just give you a quote here from John Maynard Keynes, and he said, Lenin is said to have declared that the best way to destroy the capitalist system was to debauch the currency. By a continuing process of inflation, governments can confiscate secretly and unobserved an important part of the wealth of their citizens. By this method, they not only confiscate, but they confiscate arbitrarily. And while the process impoverishes many, it actually enriches some. So there you go. That's why we're having this huge inequality. It's because of inflation. And I'll show you how the UK government, at least, is cheating the general public with their measures of inflation. I'll touch upon that here. I know that in the US, the same thing happens, that the CPI, the way it's calculated now, is not the same as it was in the 80s or 70s. And you can go to shadowstats.com, and John Williams, he looks at what the rate should really be if they calculated it the way they did in the past. Before I do that, of course, I want to look at where the markets are. I'll also have a quick look at what's going on with Brexit. There was an important vote yesterday, but yeah, it doesn't actually, in my opinion, take no deal Brexit off the table, and I'll show you why. Of course, the UK doesn't have much time. We've only got just over about 15 days to sort things out. Not us, but the Parliament and the government. So it's 8:24 a.m. London time. Yesterday, the stock markets did do very well in the States. They did come off their highs, though, and I noticed the S&P traded above key resistance for that head and shoulder. And even if it goes above that level for the head and shoulder, it doesn't mean that the right hand shoulder can't be formed a little higher. So we'll need to wait and see. So the Dow yesterday finished up 148 or 0.5% higher. S&P finished at 2810. My key level there is 2820. The Dow is still way below the key technical resistance, in my opinion, which is around 26,250. So this morning we got spot gold down 6.5. Yeah, we need to be patient. Gold and silver are the only things that will protect you in the long term against inflation that Mr. Keynes and Lenin were talking about in that quote. So we are at 1302.20, down 6.5. Overnight low has been 1301.50, and the high has been 1310.60. Yesterday, gold did very well. It broke through that 1300 level, went up to around 1311, pretty much where the high's been today. I didn't really like the price action because silver was doing nothing. And that's despite the fact that the stock market was higher, crude oil was higher, and somehow, for some reason, the silver didn't go anywhere. We probably know why. So spot silver is down 12, so that's not surprising. It's down almost 1%, while gold is down 0.5%. We're at 1531. The range has been 15, well, right around here, the low 1531 and the high 1547. The Dow is up 37 points, 0.15%. S&P is up 5 at 2814. NASDAQ 100 futures up 0.25%, 72.72. The pound is very volatile still. Yesterday we got up to, well, it moved all over the place. Right now, this morning, we've actually just rebounded here. It's been as low overnight as 132.38. It's now 133.23, down 13. There was a bit of a rally before the result of the vote yesterday. The vote was to a motion, actually, so it wasn't passing an act of parliament, so it's not law. So this is what Jacob Rees-Mogg, one of the MPs who is pro-Brexit and wouldn't mind a no-deal Brexit, this is what he said.
So Parliament has made its will known. It has said that it doesn't want a no-deal Brexit.
The will of Parliament is made known through legislation, not through motion. We are ruled by law, not through arbitrary motions in the House of Commons. The law still says we leave on the 29th of March 2019. That's both EU law and UK law. That isn't changed by today's motion. Government's policy may alter, may be differed, but the law is still the same that we leave on the 29th of March.
Some would say the Prime Minister would be morally obliged to accept this. She said last night at the dispatch box, if the Parliament voted for a no-deal Brexit, she would adopt that as policy. Can she not do the same here?
In my view, the greater moral obligation is of 17.4 million people who voted to leave. That is her duty, and it was in the Conservative Party manifesto that we would leave, and we would leave without a deal. If no deal was better than a bad deal, we'd be out of the customs union, out of the single market. But the moral authority of 17.4 million people cannot be cast aside for just a motion, a mere motion, not the law, but a mere motion.
So there you go, Jacob Rees-Mogg, who knows a lot about the way the UK, constitution works and government works, saying that yesterday's vote was just a motion, so it is not etched in stone that it's a new law, that there won't be an exit without no deal. So it's still possible, in my opinion. So things are still uncertain in the UK as Brexit is concerned. I think today they're going to vote upon extending Article 50, which ends on March 29th. So if they can extend that, they feel that maybe they can find a way to a deal. The law still says that if there's no deal, the UK should leave without a deal. And that's what Jacob Rees-Mogg made very clear. So the euro on all this is fairly steady, 113.27 unchanged. Dollar is up 0.5% against the yen, 111.70. Dollar yuan is up almost 1/3%, so the dollar doing well against the yuan at 6.72. As I said, crude oil moved higher yesterday. We're almost up to around 60 in WTI. Right now we're up at 58.87, or up 2/3%. Brent is at 68, up 1/4% this morning. The 10-year yield has risen a little bit in the last few days from around 260, which is pretty much the low of the year, to right now 264. Inflation, yes, an insidious tax. And I think Lenin also said that only 1 in a million really notice or know what's going on. And you'd think by now people would be alert to that and realize that inflation really is an insidious tax by government and the central bank. And it's only really possible in the fiat money system, where the central bank is given the power to issue the currency through their commercial banks, and the government basically has no limit on how much debt it can issue, and therefore inflate the money supply, because the debt is the money under a fiat money system. And why am I talking about this today? Is it just to talk about how it's insidious? No, how it can be dangerous, and how the establishment and also the mainstream media and people in general can use other issues to put the blame, other issues or scapegoats to create division in society. And I saw someone that I know on Facebook, I'm not going to tell who it is. This person put this picture on Facebook, and it says, men like this are forced to work until they're 70, right? And then it says below it, because the government is bringing in more and more people like this. They look like a Middle Eastern family, or it doesn't say, but it's implying that they're refugees. And they're bringing them in and paying for them. Are they doing that? Yes, a little bit. But is that really the reason why these men here need to work till 70? No, I think it's complete. It's dangerous. It shines the spotlight on the wrong people. They haven't debased the British pound or sterling or the dollar over the last 20 years. It's not their fault. If anything, it's the government's fault, the central bank's fault, all the wars that we've had to finance, all the bailouts for the City of London and the financial sector that we had to save and are still saving with 0% interest rates. So that's the policy to blame, and that's the inflation that is to blame. So you can see here that picture there says that those men now have to work till they're 70. So let's say I got an inflation calculator here, £1 or $1, and you have an annual inflation rate of 3% over 40 years. So let's say you start working at 20 and you're almost retiring by 60. That dollar or that pound has been reduced to 30p. That's its purchasing power now. So if your wages don't keep up with that, well, not only your wages, but your savings, if your savings haven't kept up with that, of course you're going to have to work longer, because you won't be able to retire with the money that you've got saved, and also that the money that you're earning, which will probably won't have kept up with the rate of inflation. And then you look at 2%, which is what central bankers say is we need to have 2% inflation. Well, over 40 years, 2%. Your pound or your dollar will only be worth 45p. And that is why men like those men are having to work till 70 or maybe even until they die because of inflation. So how does the UK, how have they fooled the people on inflation in the last 20 years? Well, I would say it's, people would say, oh, it's the conservatives, the Tories, they hate workers, they want to help business. No, it was a Labour government who started the mechanism and the deception. And this is how they did it. They changed the measure that they use for government policy, for budgets, for indexation, for the minimum wage, which of course I don't believe in minimum wages or any price caps by governments. I think the market should decide wages. But anyway, this is, be as it may, this is what is used. The government used to use something called the RPI. It says here, in the United Kingdom, the Retail Price Index, or RPI, is a measure of inflation published monthly by the Office for National Statistics. It measures the change in the cost of a representative sample of retail goods and services. So this is what they used to use, the RPI. RPI is still used by the government as a base for various purposes, such as the amounts payable on index-linked securities, including index-linked gilts, and social housing rent increases. Many employers also use it as a starting point in wage negotiation. Since, and this is the important part, since 2003, it is no longer used by the government for the inflation target for the Bank of England's monetary policy, nor from 2011 as the basis for the indexation of the pensions of former public sector employees. As of 2016, the UK state pension is indexed by the highest of the increase in average earnings of CPI, or triple lock. So it's been almost, 16 years now that they've given up or they've replaced RPI, and they're using the CPI now. And why is the RPI has been historically higher, and that's how they've done it. And I would say they still doctor probably the RPI, and they definitely doctored the CPI. And I'll show you here the difference. So let's say 2018, the RPI was 2.7%. CPI was 2.5. Not a big difference, but still higher the RPI. So 2017, the CPI was 2.7, RPI was 4.1. So you get the gist there. 2016, RPI 2.5, CPI 0.7. 2015, RPI 1.2, CPI 0, right? 2014, RPI 1.6, CPI 0.7. 2011, RPI 4.8, CPI 4.5, so still higher. 2010, 4.8 RPI, CPI 3.3. 2009, RPI 2.4, CPI 2.2. So you get the idea. And then you go back also to like 2003, since they started using just CPI. RPI was 2.8, CPI was 1.4. 2004, CPI was 3.5. RPI was 1.3. So you get the gist of it. That's why people are having to work longer in the UK, because they're debasing the currency. They're inflating, and they're using bogus numbers to fool the people. But most people think it's because of immigrants or refugees. Yes, the UK welfare system is very generous, but it's not only refugees or immigrants that use that welfare system or game the system. A lot of the native people game it, or I would say most of the gaming is done through them because they know the system. So the only time really that we saw the CPI higher than the RPI was during the financial crisis. And why was that? Well, because rent and house prices are included in the RPI. So when you had the collapse of housing, for example, 2008, RPI was 0.9, and the CPI was 3.6. But even then, it would still have been bad because now they're using the CPI, right? So you won't even win if there is a housing collapse because CPI will not drop, but RPI will. So that's how they do it, the insidious tax. So we have to be very vigilant and not buy into this jingoism, in my opinion, and look at the real culprits. So who are the real culprits? Well, it's the monetary system, the banking system that allows government to borrow as much as they want and manipulate interest rates and statistics lower. And that's why people are hard up, the majority of people, because as Keynes said in his quote about Lenin, that the process impoverishes many, and there we go. And it actually enriches some, the 1%, or even less than the 1%. What more need be said? So if you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, share the video far and wide so people don't buy into this jingoistic claptrap out there. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.